China continues to rear its ugly head, and the news is increasingly worrisome. The March flash HSBC Purchasing Managers Index posted another decline in manufacturing activity. The reading of 48.1 was down from 49.6 in February, and any reading below 50 signals contraction. I consider this data point one of the most important indicators of China's economy. And given the current global economy, as China goes, so goes the world. China's economy is manufacturing based. Although domestic consumption is increasing, its economy remains heavily dependent on exports. That's why I key on this single data point. It indicates the overall strength of global economic activity. With housing and construction remaining weak, the U.S. economic recovery has depended on exports to China and other nations that feed off of China. That's why in the past 18 months, Main Street continued to feel the pain, while multinationals were relatively prosperous. Now, Main Street is slowly catching up. However, if China slows, it could stall the process. If we were talking about one bad month, we wouldn't be talking. But the PMI readings have signaled contraction for 5 straight months. In technical economic jargon, that's what is called a trend. Most economists dismiss the possibility of a hard landing because China possesses the financial and political means to quickly stimulate its economy. That's true enough, but such thinking is why economists are putzes. They assume China's interests are aligned with ours. And then that may be accurate in the long term, but not necessarily in the short term. China is fixated on inflation, and they realize that they have a housing bubble brewing. Unlike our leaders, who sat idly by until we imploded, China's may be wise enough to attempt to slowly deflate their housing bubble. If they decide that finessing the housing market is more important than growth, China may be content to live with slower growth in the near term. It wasn't whimsy that caused China to lower its official growth target for the first time in 7 years. Again, unlike our leaders who routinely say things they don't mean to gain a political edge, China's officials, unencumbered by the need to run for office, don't speak frivolously. One gets the sense that they mean what they say. A final reading on the HSBC number is due in the next few weeks, and China's first quarter GDP and March industrial production are due on April 13th. Pay attention to these numbers. If they signal continued weakness, and if Chinese officials don't take stronger actions shortly thereafter, we'll have our answer on where China's priorities lie.